Hi, this is Michael Sutton with Roark and Sutton. Today I'd like to tell you a little bit about fee agreements and how those can be beneficial to you. We like to use fee agreements in certain situations, typically on larger clients, especially in circumstances where there's maybe more than one policy involved. A lot of our trucking clients, for instance, have a policy for auto liability, another policy for auto physical damage, another policy for the excess, and then you got your cyber, your employment practices. Cargo can sometimes be on its own. Oftentimes, what we like about the fee agreements are there's really three things that it does that we feel like are a benefit to clients rather than leaving the commission in the policies. The first thing, it removes the conflict of interest. What a lot of clients don't know, and one thing that we really strive to do, is to be fully transparent with all of our prospects and clients. What gets lost sometimes is that different carriers pay our agency different commission percentages. So the conflict of interest is if we have a policy that may be a little less premium, but we get less commission on it, versus a policy that may be a few $1,000s more, but we get more commission on it, would there be an incentive for a producer to not show you the better priced policy because they're not going to get paid as much on it? There's a possibility. So doing a fee agreement takes all of that out of the equation. The second thing we like about the fee agreement is that it makes that conversation that we were just talking about with carriers and premiums completely consultative, because if you buy a policy or don't buy a policy on the fee agreement, the agency makes the same money and the producer makes the same money. So from a conversational side, you don't feel like you're getting sold something. The entire conversation can be centered around what are you at risk of from a risk standpoint based on your operations, and what is the best solution for you. There's a lot of different ways from a deductible standpoint and a coverage standpoint to transfer the risk that you have to an insurance company. And with a fee agreement, it really makes that a consultative conversation, because we already know, you know, and we know what our fee is going to be, whether you buy 7 policies or 4 policies, or however you structure those policies, and how that impacts the premium has nothing to do with the money that you're going to pay your broker to get all that taken care of and arranged. The third thing that we like about it is, as brokers, if we're really doing our job and we're really helping you manage your CAB report and your ISS score, if we're overseeing your claims and trying to push those through the system, stay on top of adjusters and get those done in an expeditious fashion with the least amount of payout. If we do all these things, then ideally over the long term, that is going to keep your premiums lower than what they would have either otherwise been. And also, we're trying to keep your premiums lower than what your competitors are, so that you're competitive in your own marketplace. What is the incentive for brokers if the more premium you pay, the more commission we make? So if we do all of our stuff right, then we should help you drive your cost of insurance down. And the cost of insurance is not just the bottom line number. We really need to find a way to analyze what your cost of insurance is that makes sense, because you may not be buying coverage that you need, so your cost of insurance maybe should go up because you have a really big risk that you need to transfer. Like I was saying before, if your premiums go up and your broker makes more, then what is their incentive to bring them down, right? Conversely, if we do our job really well and we negotiate with all of our carriers well, we approach all the markets that specialize in your type of business, and we get you a solution that transfers your risk more appropriately and also more cost effectively for you, maybe we should earn more on the fee agreement as opposed to earning less because we help get your premium down. So these are all conversations that we like to have with our clients. These 3 things that we want to fix with the fee agreement are: we're going to remove the conflict of interest, we're going to make it a fully transparent and consultative conversation, we're not going to get rewarded just in case something bad happens to you and one of your drivers screws up and runs over somebody and now your premiums go up. Does that necessarily mean we should get paid more? That's up to you to decide, but if we can help keep your cost of insurance flat and you see that we're working hard for you, that's how we want to earn more fee and more commission for taking care of your business. I hope you found this helpful as another way to look at how to do your commissions or your fee agreement when you're having a conversation with your broker. We'd love to have a conversation with you about how we handle this with our other clients, and we feel like this can be hugely beneficial to people in the long run. So we look forward to talking to you. Thank you very much.